don't really know, but oh, I'm gonna let a couple people get in here really quick. See how it's going. Okay. I'm not gonna completely start until we have people tuning in. Ripple. Let's see. We're gonna break down some stocks though. Let's see. Hang on. I'm gonna go ahead and clear my drawings really quick. It'll give people time to start joining. I want at least a couple people here before I start breaking down stocks. Let's see. I need the window somehow. Hang on, let me pop out the chat so I can see the chat as we're going. Where's my chat at? It is somewhere. Restore chat. There we go. Alright, and I think I could pop it out. Pop out chat. That way I could just see everything that's going on. What's up, Chandler? Yeah, I see you. Would you mind me calling you Chandler or Anthony? Let's see. Okay, sweet. Alright, that sounds perfect to me. I'm going to see just really quick before I get started. I'm just trying to make sure I could see the chat window. That way I can read everything. Oh, I see what's going on. I need a mini size. I think our swim window. One second. Not too much. Okay, that's good. Yeah, now I could see the chat. Sweet. Oh. Let's see. I'm gonna wait for just a couple more people to join before I break down stocks. Oh yeah. You looking at Amazon? Yes. I was interested in Amazon a little bit back. I still think that it might come down for a better deal than what it's at right now. Uh, but yeah, as of right now, I am looking at Amazon. I'm looking at a bunch of different ones right now. Let's see. Ooh. Oh, I see what's going on here. Sorry. Hang on one second. Sorry, I'm trying to read some settings going on here. Huh. That's really interesting. Oh, I think I see what's going on. Okay. One second. Let me bring this down to 200. I don't know how that's going to work out, but we are about to try it. I'm trying to set the settings to so it optimizes a little bit better. I just got the Thinkorswim today. Well, here we go. Yes, Thinkorswim is my all-time favorite. Like, I will literally never change from Thinkorswim. OCD is so bad. Alright. I'm just waiting for a couple more people to join. We probably won't get that many people, so if it's, if we don't get another person within the next 5-10 minutes, then I'll go ahead and start breaking them down. Okay, we got 2 people. Okay, is everything looking good on your guys' end? Whew. These braces are cutting up my mouth. Good lord. Painful. Alright, sweet. I just saw that my computer's on 100% and it's been there, and I saw it unplug the charger. I almost dropped my computer. Let's see. Okay, we got 2 people watching. I'm just gonna start probably right now. And as people join, if they stay, they stay. If they don't, they don't. But I guess they'll start joining as we start breaking down stocks. Um, but yeah, I wanted to start with. Hang on, I want to start with SPY really quick. Have you done paper stocks? Yes, definitely. Yeah, I definitely done that. When I first started, I used to paper trade all the time. Paper trading is the ideal way to go before real money, but there is something that a lot of people don't talk about in paper trading, and one thing is paper trading. You don't use your emotions because your brain knows that it's not real. So you tend to do better in paper money than you do with real money. But the way to prevent that is really you need a lot of mental power. You have to be able to like concentrate and say, all right, like make yourself believe. Like when you go to paper trading money, set it to about $1,000. That way you're not trading with 100,000 because it's just unrealistic. I mean, not it's not like you can do that, but for a beginner to start practicing, you need to practice with like $500 to $1,000 so you can see like those real profits, like the real margin range. Because if you trade with 100,000, you make $5,000, and then you go to put real money in there, and you put 1,000 in there, then you're gonna make like 50, $30 or something like that, and you're gonna lose all your money because you're gonna want to see bigger profits because that's what you're used to. So if you are paper trading, set your account balance um, to around $1,000 and see what you can build from there. I think I built mine like 3 or 4 times before I went into the real money. Um, yeah, so I don't know if you guys know this, but SPY is Amazon and SPY are almost similar. They have, they're different patterns, but same direction. Basically, when one's up, usually they're both up. I want to clear this really quick. Although, see, I haven't looked at it over the weekend, but it's doing exactly what we said in that video the other day. Uh, I remember right here is when we were calling it out because it made this, or right here is when we were calling it out. It made this 100% recovery. It like pushed down, or it fell 100%, pushed up 100%, and then fell back down and made this higher low pattern. So it was growing. So now we have this trend. And now to get our good deal range, we can kind of draw a trend line. And it goes up along this area. Hang on, I'm gonna change that really quick. Okay, I'm trying to get the best ideal range. Um, so this trend line is usually the Goodell range. Now it does not have to touch this trend line. I mean, it would make sense for it not to touch the trend line if it's growing, because if it's growing fast enough, it's probably going to make a higher low, as in like it won't touch its a normal trend. It'd be growing. So what we're going to want to see is either this goes sideways for a little while until it hits this trend line and then pushes up, or see if it comes back down for a good deal, and not to buy at the trend line, but to wait for it and wait for the actual confirmation. Like if it holds above that trend line and starts bouncing and breaking highs, then I would definitely invest, and probably invest all the way back up to 288, near 289 to its resistance, because we do have a solid resistance. Hang on, I'm going to clear this really quick. Alright, so I don't know if you guys can see the resistance here, but there is a clean resistance. Be conservative, I'd say right there. Um, Now this is like a really hard resistance. Typically, like we did have a gap down here, but technically it filled with the wick. I did learn that the hard way, that that is a fill. A lot of people, don't know how to trade gaps, or they misunderstand it. Even if the wick touches where it started falling from, then it's a fill, and the gap. But it started pushing down, making lower lows, and then whenever we got this high push, I was on the watch. I was like, okay, we have a potential, change in direction. It came back down, and then right when this candle closed here, like it closed this high, it engulfed this candle and this candle. So technically the price stayed way up here. It just basically stayed right there, technically speaking. Um, so in my eyes, when something falls from 100%, and hang on, I want to draw a support here too. When something falls 100% and recovers 100%, or you can look at it as this is the recovery. So when it falls 100% and it recovers 100%, usually that's a bottom out sign. That's usually like a sign that, it's at its bottom. Like basically what was going on, or this is how you can look at it, the psychological point of view. You can kind of look at it as in, it's selling off. People are selling. They're like, okay, I'm waiting for a good deal. I want to buy a good deal area. And then you have some of your traders that are buying at the trend line and then losing their money, buying at the trend line. Oh, we're going up, holding the bag, and then losing their money and selling and taking a loss. Um, and then some people see this right here. What happened? This is why, obviously, you want to sell, as a day trader. You would want to sell right here, because it's at a past resistance. And selling, this is a good example, guys. When I say sell at the past resistance, the reason I do that is because, and that's what makes me so consistent, is I can take, like, I literally hardly ever take red days. I kid you not, like, go months, months, and months, and months without taking red days. And the reason why, it gets so easy sometimes, but the reason why is because I sell at the past resistance. You can watch the past videos of me selling at the past resistance, and one thing I noticed is, this is a good example here. I would have sold right here at 288, so I would have entered around that 286, 40 area, and let it push up, and then I would have sold at 288, most likely 288.36, and then lost that little margin up there. But since I sold, it gapped down and opened way down here. Could you imagine if you would have held in that, thinking it's going to just shoot up and be the bottom? Because like, you can't determine that. So if like I move this back really quick, right there, it does look like that could have been the bottom. Like, it fell 100% and then recovered 100%. But still, that we need to remind ourselves, like, just hang on, let me make sure the live stream's still going. Wouldn't that be something else? I'd be over here talking to myself. Okay, can you guys still hear me? I just want to make sure. It's going. Sweet. Okay, just wanted to make sure. I accidentally just drew a trend line. Okay, but yeah, it fell 100% and recovered 100%. We would want to sell at the previous resistance. For example, if we were to enter it somewhere in here, we would want to sell here. And people did. People was like, it bought in, sold right at the previous resistance, that multiple touches at this previous resistance. Now, since it's had multiple touches on that resistance, like, all right, so it's just hard to explain. Since it's touched it once and retested again and fell, and then it was like, no, we're going to go again, and retested all the way back up here again, most likely it will totally probably break. But you don't know that because we can't read the future. Like, not even me, and I study these things like absolutely crazy. No trader, no human being can read the future as if we know of. But so, sell at the previous resistance, in my opinion, just because when it goes to touch that area, you don't know if it's going to come back down and make lower lows. Like it could break this low. Um, and whoever sold here, did a good job because they sold and look where it opened up at. It opened at 285.62. And most likely they would have sold there. Yeah, they could have waited and let it push up. And when it did push up, you can see that a lot of sellers started selling and then it closed. The candle closed right there at 287.32. Imagine how rich you would be if you could go to, right? Oh my gosh, it'd be unreal. It would be crazy unreal. But yeah, my overall view on this, really, to be honest, is yeah, I'm looking out for some calls, but I want to wait for the good deal. I don't want to enter too early and um, enter like without the confirmation. And sadly speaking, a lot of people think that when it shows this like hook or curl formation, which this is where the stock market can be misunderstood. Like I did this so many times. A lot of traders on YouTube do tell people the truth. They don't lie to them. A lot of them don't beat around the bush. A lot of them just talk nonsense. And then they keep like 2 minutes of information in their video. Um, when like if I make a 5 minute video, it's going to be 5 minutes of information. Um, but a lot of people tend to do that, and they are right. What does dill mean? Sorry, um, I cannot believe I just. Oh my gosh. No, deal. Deal as in like good deal, like a good price. I'm sorry. It's my accent. I apologize. You're not the first person that has said that. Here, I'll type it in the chat. Good deal. Uh, yeah, I apologize. Um, good Lord, I gotta work on that. It's my accent. Yeah, so basically like a good deal area, like deal area. um, So it's curled, right? A lot of people think that when it's curling that it's going to go back up, and it doesn't have to. See, this thing could actually stop here at this resistance, at this 290 area. I should have just got a price action, but or a price level, but I didn't. Basically, here we go. So it could totally stop at 290.52 and then start pushing down, breaking lows of 280.67 and turning back down to a area down here before it pushes way back up, right? Because it's not just going to keep going up like constantly, not not unless it was really slow. Um, that would be, when a stock trends up really fast, usually it crashes really fast. When it trends up really slow, it can stay consistent and keep going up. Now we have had kind of a slow like rise, which is very healthy. Slow rises are healthy. Fast pushes are not healthy. If you're in a fast push, you better, in my opinion, whenever I'm in a fast push, I sell immediately. I mean, when that thing rips, like I've been in it before. In fact, I was in, look, I called this out right here. This whole entire push all the way down. Actually, I think I have this on video and I could upload it if I could find it. But I did this live on Discord actually. Um, I shorted this because we were trading options. Um, I shorted, I mean, this was one of the best trades ever. From I think it was like 276.50 around this area. Um, I traded a short position all the way down, and then right in this area, I no, it. All right, so it fell all the way down. It pulled up, and I added to my position in this area, and this is why, right here. There was three solid resistance, right? Look, so I noticed that it got rejected, fell down, right? And yes, there's technically a support there too, but I didn't really want to focus on it too much because I'm trying to like show why I did this. So this might help. So it bounced. This is kind of like these are heavy support and resistance, and this is like a support, kind of like it's not too heavy and it's not too strong. Um, but basically, it falls down, it bounces. So after this large fall, it bounced here. So it's pretty strong, right? That's a pretty strong support in a way. Um, but it comes up, it rejects, and it falls below that support, but then comes right back up to retest it. It fell 100%, and then it recovered 100%. Now, if it would have broke highs, that would have been different, like clean broken highs, and then you would watch out for it. But so most likely, see, it rejected, right, and it confirmed a rejection right there. Um, right whenever it broke that area there, it broke down right below it, it was making lower lows. You know, there was a gap here, it gapped up, and then it came back down and filled the gap, but kept dropping, and then retested the gap right here, and then kept falling. So that was my first sign. I was like, oh, okay, it's pretty weak, and it's kind of scary. I even told everyone, I was like, people don't understand the market actually might crash here, and it's kind of worrying me. Um, at what point would you buy it? In my opinion, right here, I bought way up here. It was like 276.50, and I'm about to show you why. It came up and rejected again, and I almost knew it was going to reject again. So it fell 100% again, and then rose 100%. It rised up 100%, and then came back down and hit the support. I entered a position knowing that okay, I'm going to trust the resistance. It has fallen 100%. Uh, so it fell 100%, recovered 100%, and then fell again 100%. That was my confirmation. That was me saying, okay, the next time it pushes up, I'm adding to a short position because it tried to recover and then it completely just fell right back where it started in the beginning right here. So as it pushed up, I think everyone also got that niche. So they were like, okay, yeah, I'm gonna this thing's weak. So I shorted it, right? I think I took a position around 276.50, which would be around this area. I could see why I took that too because it gapped up and then kind of exactly why I did this one right here. Um, but it fell down and then I added to my position right here in this area. What I said earlier. It might have been over here. I added somewhere whenever it rose back up, right? The reason I added there though is because that was a past support, right? It bounced, then broke through, and then it bounced, and then it bounced, and then it broke through, and then it pushed up above it, and I shorted it, and it fell all the way through the support, bounced, added to my position because I knew it was getting weak. It was really weak that it fell that whole time right there. Um, so I added to my position and then it started falling, and it was one of the largest profits I've ever taken in my entire life trading. Um, One of the all time largest. Uh, but I'm going to clear this really quick. Clear my drawings. Yes. And we're going to kind of jump right back into what we were doing earlier. Let's see. So, what do I think that the market's going to be doing? Like, what are we going to be looking for Monday, basically, tomorrow, um, or today? It's 12:07 in my time. So, what I'm looking for is I want to see if it breaks highs. I'm not going to take a position until it does break highs, and that's the catch. Don't take a position because it breaks highs. You want to watch for a position when it breaks highs. This is what I stress on my Instagram story. What do you do to scan? I usually don't scan stocks. I stick with a few. You got to pick your berries, your good berries, and leave all the other ones out, or else you're going to get a poisonous one time. You know what I mean? Like so, if you were to just keep eating random berries, eventually there's going to be a poisonous one, which would be you choosing random stocks out of a scanner, and then you hit a bad one and it wipes your account out. So that's from my experience. That's why I don't do that. I'm just trying to play it safe and consistently profit. But one thing I do is focus on just a couple stocks, right? So I don't even have to scan. I'll go to like the big blue chip stocks, like SPY, Amazon, Microsoft, AMD, which is really cheap. And then you can option trade. And option trading makes it way cheaper and you can get way more shares in. So you can get like 5 contracts and each contract has 100 shares. So you're trading with 500 shares for like 500 bucks. When 500 shares of just 2 shares would be past 500 bucks on this, but you have 500 in option trading. If you don't know about option trading, um, I'll make a video over it. Um, but yeah, so here's this clean cut resistance. You see we got rejected here, test, it broke through, and then we got a bounce. So that's a clean resistance and support. It bounced here, fell through, and then rejected off this, and then pushed down, rejected again, pushed up, rejected again. Now, what we're going to look out for is to see if it breaks that resistance. I'm going to actually see if it breaks that wick of the candle to be safe. I don't want it to double top. So I'm going to set my alert and then I'm going to push it up a little more than usual. Right there. And set. Now if it breaks that, then I know I can, wait for the pullback on a good deal. Typically, that support most likely. Wait for it to consolidate, and then when it starts breaking its highs, here I'll show you basically. This is how like um, let's see. So if you go to the day trade chart, you can totally day trade stuff like this right here. Like if this opens down here, then I would be a little worried, but if it started confirming it breaking highs, then I would definitely take a position because, it is kind of trending up, but there is a downtrend pattern to it, so it can keep trending down, right? Like I don't know if you can see it, but there is kind of like this downtrend pattern here. So it could go up and reject, push up, reject, and then push up. And if it opens right here, be careful to take a position thinking that it's going to break highs because it could totally start rejecting off this trend line. Now, if it breaks this trend line, then you would want to wait for it to pull back and then take a position and let it push up. Because you got to pull back, right? You got to wait for the pullback. There is always a pullback. And sometimes, like, I guess I can't say always because sometimes there isn't a pullback. But here's the thing about that. Like, if there's not a pullback, then you don't want to take a position, period, because a fast push is a fast fall. And most likely, when it pushes up aggressively and you feel like you missed out, they call it FOMO. I don't know if you've heard that, Chandler. It's called FOMO. Um, they basically, it's called the fear of missing out. So you build up this FOMO feeling, and everyone does it. You look, it's something you get used to. You never get rid of FOMO. I get it every day. I know professional traders that get it every single day. Um, but one thing that you can do though to prevent this FOMO feeling is make yourself have an analogy in your head. If a runner runs a track and he runs constantly without stopping, he's probably going to fall and have a heart attack and die, sadly speaking. But if a runner runs a track and takes a break, it could run again, take another break, and then run again. It just ran 3 times what the first one ran, right? Because, and basically what I mean by that is when a stock keeps running, it usually has a heart attack and it'll fall all the way back down. Um, so you don't, fast runs are not healthy. But slow and consistent paces are very nice because, it's not going to have a heart attack. It has time. It's breathed. It took a breath, it took a drink of water basically, and then it starts pushing. So it's more consistent. As in, like, the quick runner that had the heart attack, yeah, he was faster. But the runner that was efficient and that took a break every once in a while was more consistent on his running. He ran 3 times the amount because he was consistent and took a break. So that's what we want to look out for our stock. You want to invest into something that's growing. So basically, like right here, here's a good example. So it had this double top, or this double bottom area right here. So what happened was it pushed up, fell all the way down, and then this part would, it would kind of scare you. It broke lows, like, there's its low. And when it pushed up here, it broke its low right here. So it's a lower low. But then it pushed up near, like, this is the support. It pushed above that support, which should have acted as a resistance, uh, but it didn't. So it came back down. Most people were just watching for it, and this is what I would do. I would watch for it and watch for it. Just it's mostly watching. So it pushes up, and it goes to retest. If I saw it, push up and touch this area right here, then I would wait for a good deal, which would be right here. At 281.09, I would have taken a position, and then I would probably sold at 282.62 because, in the day trade chart, you can kind of see the trends a little bit better. But you can also see that in the past, there was a resistance and support at this area. So I would have probably bought in around the 281.60 area and sold at the 282.75 area. And in option trading, that's really good. Are you going to invest in the stock tomorrow? Most likely, if it's set up pretty good, then yeah, I will. Um, but yeah, that's basically how I determine that. Is see how do you determine? Because while you're trading, this is what it looks like. While you're trading, it's scary. You don't want to take a position in this big candle. Let's pretend like we're live trading here. So we go over, we see the next candle, right? We're like, oh, that's most people call that a gravestone candle. It's a very bearish candle. But it pushes, or it keeps kind of pushing down. And then right here I would have been watching this overnight. And I would have been like, okay, there was a bull or a bearish engulfing candle, but then this bullish candle almost engulfed the entire red candle. So my eyes would be open because that is a sign of a bottom, right? Like when this whole entire red candle pushed down, and then there was a bullish engulfing candle, which means it engulfed the whole, the whole red candle previously that happened before it. When that happens, typically it's a bottom sign, right? So I would be looking out right here because there's some volume coming in, and there's a lot of bulls coming in right here, even after that sell-off. So it could potentially, in my brain, this is what I would be thinking. Okay, we might be getting a higher low here. It bounced here. This could be the higher low. Could be, or it could start breaking lower lows. But this is what I watch out for. Boom, right there. It broke above that candle. So now we're getting the curl. But now that we have the curl, we want to watch out for it to break highs, or to retest highs, and then get it in for a good deal. So we keep waiting for it as it's pushing up, right? So we're not taking a position yet. And on the day trade chart, you can day trade it, but I'm talking about like overall, you don't want to really take a position until we know. But the fact that this candle pushed to its previous highs confirms that higher low, right? So like that's a confirmation. That is a valid bounce. Technically, when it broke this candle right here, when it broke that candle, you could see that a bunch of bulls came in because it broke previous highs, right? It retested and rejected. Now that it broke that candle, that's a valid bounce. So now you got a higher low. And then as it goes, you get in for the good deal around that 281 area, and then it starts pushing up, gaps up overnight, starts pushing up, right? And then you want to eventually sell because there's no, record. A lot of times you can look in the past, but you don't want to really. A lot of times because the past had different fundamentals. It had different chapters. It had different things. Like for example, we've all done stupid things as a kid, but does that mean we're going to do stupid things when we get older? Not necessarily, because our past has, our future change. So same in stocks, like things change, so patterns change. So over time, you gotta kind of mold to these patterns. Can you explain how candles work a little bit? I have a surface understanding, but not true understanding, to be honest. Um, yeah, a lot of times you don't want to really focus too much on the candles. You want to mainly just watch the patterns. Candles can be important some at periods of time. Um, the candle patterns I would really focus on mostly. But don't be like there's a lot of names out there for candles, okay, and they overcomplicate it on purpose. It is so complicated if you really think about it. There's so many different names. Mainly, what you just need to focus on is engulfing candles, right? So like if you get let's see if I can find one. If you get like a candle, good grief, right here. All right, so you see this candle. This is a perfect example. So see, I think you might know this, but I'll just go really beginnerish right here. But a red candle opens high on the high right here. It opens and it closes low, and green candles open at the bottom and close at the top. So that's how they move. When there's a red candle, they move down and then they close. And then when the green candle, it opened here, but then the price started trading here. So it opened and then it closed. But basically, what you need to focus on is a bullish engulfing candle or a bearish engulfing candle. Look, all right, I'll show you an example really quick. So see how this candle, it was red. It fell all the way down from 285.88 to 285.76, technically speaking. This one kind of opened around that 285.76 area and then closed around that 285.88 area. So that it engulfed, like people were selling and it completely engulfed. So everyone was basically like, okay, I'm buying this price. They bought it right back up to here. Technically speaking, you could draw a support right here. You don't have to draw it in this area because, yes, it traded below this area, but it traded right back above this area. So technically, and which is why this candle opened right here at the support and started pushing up because it engulfed it. So technically, the price action kind of remained like this, a loop and then a bounce. It technically never went way down here. It went up here and then it bounced. So it gets confusing. It's all about practice. But look what happened here, right? We get this support here, and you don't want to solely rely on this. It does not have to happen, but most likely, see how it engulfed. the next candles most likely could push up, right? Like it did push up. So it pushed up, engulfed, waited for the good deal, bought at 286.77, and then pushed up and sold at its previous resistance. I would sell here, um, sold at 287.13, and let's see what happens. It keeps pushing up. Of course, you can wait, and then you get this bearish engulfing candle, which technically could have meant it was falling, right? But then you get another bullish engulfing candle right after that, and then another. They called this I forget what they call this candle. There's like a dragonfly. This is a doji. This is a dragonfly, or pen bar, whatever you want. There's different names for it. Oh, so many candles. It's honestly it's overcomplicated. What you really want to focus on though is see how this technically was going into a downtrend when this candle closed way down here. It engulfed this entire green candle, but then it pushed back up, and what we were waiting on is to see if this candle would engulf this green candle. It's like a game, to be honest. Bulls versus bears. It's like a game. Um, but it opened here and it pushed down and it tried to engulf the whole candle. But then buyers came in and let it close right here above this green candle, so it didn't engulf. And that was an immediate sign of, oh wait, this thing could be, that could have been the pullback right there. Um, and then it pushed up and it broke the highs. It made this U shape. See how this resistance here, how it closed there, opened there, and then came back down. Well, now it pushed and broke above that area. So then people waited for the good deal, let it pull back, 280, that 287.22, and then let it push all the way up, all the way up. But basically, the 1 minute chart is like, it's so fun to play with. I love day trading because it's like it's unreal on like let's just say don't be in public when you're trading. Like try to stay enclosed or in your car, because when you profit or when it's going up, you will literally start yelling without even realizing it. Like you're so pumped. It is so like it kicks your adrenaline in. Like it is crazy. Um, but what I want to look out for though, let's see. So here's what we're gonna do, and then I'll end the live stream. I'm gonna do these every night probably, but um, let's see. So we got our resistance and our support. Um, we got our direction. Our overall direction is up. It's never broke lows. It came down, but it didn't break below this area. So it's technically a higher low. Now to confirm this higher low, we want to see it, you can see I have an alert right here. We want to see it break this wick, break this high. If it breaks that, then yes, it'll continue its trend up, or most likely because that is a bottom out area. Sorry. Okay, sorry about that. Can you do the live stream a little bit earlier? Yes, definitely. Tonight I did it way too late. Like I gotta wake up early tomorrow, and I did it way too late. But yes, definitely. Also, is this your full-time job? Yes, technically speaking, it's full-time, but I do other stuff here and there. Like I've been getting into the whole car selling thing, like flipping cars, and um, I've been wanting to jump into some real estate. But that's stuff that I'm not going to really mention because the stock market is my true number one passion. Um, but you can see here that let's see. Yeah, so you can see here that it has this resistance. If it breaks that, makes higher highs, then we know it's growing. Then we can validate that's the bottom. It's going to be making higher highs. I'll let it come back down to that 289 area and just let it rip all the way up. And I'll probably sell around the 293 area, 294, to be safe. Yeah, I'd say that 293 area right there. So entry and then exit. Now, for tomorrow, because this chart technically looks like it pulled back, right? So for tomorrow, what I would want to see is I will take a position if it touches 285, right? How long have you been doing stocks? I've been doing them for about 4 years now, 4.5 years. I'm 20 years old. I started whenever I was like 16 and a half. I turned 21 in about 6 months. But yeah, I started around 16 and a half. And then kind of, honestly, I got into it because my math class was talking about inductive reasoning. You're 16. Oh, it's a perfect time to start. Oh, I'm telling you right now, you will not regret it, I promise. Now, don't get me wrong, you're never going to experience what it's like to take all green days. You're going to take red days. It is a must. Look, if it's better to take red days now than later, and what I'm trying to say is this is why it would be better to paper trade and pretend like it's real. Is because every trader takes red days. That's how you learn. You're paying to learn, literally. Like that is how it is. I used to hate myself over it, and eventually I started, kept going, and people were like, "Are you crazy? Why do you keep throwing money in it? Like you literally throw every dime you get inside of the stock market, even if you lose it." Well, I kept doing it and doing it and doing it, over and over. But it was like, okay, I paid for this lesson, so if you ever lose money, make sure you learn from it because you don't want to pay $200, like lose $200. You don't want to pay $200 to say to yourself like, okay, I just lost $200. So technically, I paid $200 to other people in the stock market. You paid $200 for the lesson. Why did you lose it? Like for that specific lesson. Um, of course, I could be here to assist you. And honestly, if you want to get into trading, I definitely think you're on the right channel because I'm not kidding. I really here sooner or later people will realize that um, there's no catch to this. There's nothing behind it. I think honestly, there's going to be more people being successful on my channel than there will be on any other channel out there. And the reason I say that is because other channels they leave misinformation behind. They leave information behind because they want to build a course. And think about it. If someone has a course, then obviously they're not telling YouTube everything because they wouldn't be able to sell their course. You got to have some kind of, something you're not saying. That way, the people that join the course, you can tell them and they can learn how to trade. And everyone with the course does that. And so, what I'm doing is 100%, I'm not selling any course, nothing. Um, what I'm doing is telling how to buy a good area, a good deal area. Like, where would you want to, okay, so look at this. We got our margin, we got our support, and we got our resistance. It's in the middle, so definitely don't want to buy here. I'm going to stick with you. Good, thank you. I appreciate that. But yeah, so you see, I'll remember you, I promise. When we get big and it's about to happen, you're going to be like, what? We're going to have 100,000 subscribers, and I'm going to say, I remember when Chandler would always join my live streams. I'm not even kidding, it's going to be sick. Um, but yeah, so see this area, how there's typically like a resistance and a support here. So I'm basically going to let this come back down. If it touches 285.22, I'll wait for the curl. If it opens that low and on the day chart it starts breaking highs, then I'll take a position back up to its resistance because this is our trading area right now. We have our good deal range and we have our bad deal range. So good deal, bad deal. Trying to get better. But yeah, so if I were to draw a trend line, it would be right here. Boom, boom, and whenever we do the live stream tomorrow, tomorrow night. I'll do it like a little earlier, because it is pretty late. But when we do our live stream tomorrow, I will kind of go over. Oh wait, where am I going? I'll kind of go over like did it really happen like this? Overall though, it's probably going to do this right here. It moves slower than most people think it does. Let me do all these confusing things. Make it transparent. Okay, so it's probably going to touch this area, and if it does, then I might buy and then sell at its previous resistance, which is around this area. So I'll probably sell here because it might, if it does touch this area overnight and it opens down here, then it might push up to that 287.50 area, and then I will sell there, because I would feel more comfortable about it because it could come back down. But most likely, if it touches that area, it's probably going to keep climbing until tomorrow and then touch this area and either reject again or start breaking highs and break out of this resistance. So we'll see what's going on, but I think honestly it's going to come back down and touch this, and if it doesn't, it'll go sideways most likely, and then touch that and then start pushing up. That's how the market usually works. Support and resistance are crucial, and I'll keep this up actually. I'll keep it on my chart so that tomorrow we can look at it and see how accurate it was. Now no one can predict the future, it does not have to do this, but this is a possible outcome, and this is what I would like to see, and if it doesn't happen, then I'll look at some other outcomes, but as of right now, this looks very good. But yeah, hey, thank you, Chandler, for joining the live stream. I really appreciate it. You were active in the chat and stuff. That really does mean a lot. But eventually, we'll start getting more people on here, and we can all kind of laugh and mess around and stuff, and go over some stocks and break them down. I'm gonna do them way earlier. Tonight was my first live stream actually, so I kind of was late on it, but Yeah, thank you for joining, Chandler. And yeah, you can go watch some of my other videos. There's a lot of good info in there. Um, thanks. I'm trying to figure this out. Yes, you are on the perfect channel. I'm telling you right now. There is not zero misleading stuff on my channel. Yes, it is confusing, but I promise you, it's just like a video game. When you play a game or you play, yeah, I'm gonna say a game analogy. When you play a game, definitely when you, oh my gosh, do you remember like what console do you play? Like if you play games, do you play Xbox or PS4 or what? Like so, for example, like if you play Xbox, uh, when you go to play a PS4, you're so confused. You're like, whoa, these controls are way different, and you don't know it. You could do it for a week and not really know it. PS4 and PC, sweet. Uh, yeah, I like the PC, and yeah. So if you were to go on Xbox, you would be like, whoa, these controls are a little different. You wouldn't know the dashboard. You wouldn't know any of that. Um, and I mean, like you would get the gist of it, right? Like the little bitty things and nicks and picks, but eventually, like a week goes by, you still are confused about it. But eventually, when months go by, you will be playing it without even thinking about what button you press. Like right now with the PS4 or the PC, but mostly I think the PS4 would be a better understanding on this. But if you were to think of it as in, like, okay, I'm playing this game, it's really confusing. Like, think about when you first got your PS4. Very first day you bought your PS4, and you got to play your first game. I guarantee it was challenging, and then eventually you caught on to this point to where right now you don't even have to think when you go to shoot on the game or something. You do not even think about what button you're pressing because you're so used to it. That's how the stock market is, I promise. Because I've been there. When I started when I was 16, it was so confusing. I had four friends that were trading with me, right? Four friends. All of them have fell out. I'm the only one left. I'm not even kidding. I became successful in the market because Ripple. Sorry, I got a dog behind me. My little puppy. Okay, but yeah, literally, they all fell out because of how confusing and hard it was. They didn't just keep going. But I understood that eventually you get used to things. Everything in life's like that. Gosh. Dang, I remember those PS2s. That's crazy. But yeah, thank you for joining though. Go watch some of my other videos. There's some really good info on there. It'll help you out for tomorrow. At least you could paper trade. I would definitely recommend paper trading for a little while. Just do it for a little bit. Um, and we'll see how it goes. And once you start proving yourself that you can profit on that paper account and grow 1,000 to 5,000, like 3 times, then you can throw in some real money in there and start trading. And then we'll break down stocks every single night on here on the live streams. But yeah, so tomorrow it'll be a little earlier. But thank you for joining. I'll see you later.